By the end of this video, I'm going to teach you how to use by far the simplest yet most powerful trading tool I have ever come across. And the best part is you can immediately begin applying it in your own trading. No fluff, no theory, no BS, just something that personally works for me almost every single day, and that could genuinely change the way that you trade. Let's not waste any more time and let's hop right into the video and making you a profitable trader. So I made $11,163 yesterday using all of the concepts that I'm going to teach you in this video. So I highly recommend watching until the end of the video because this can truly be transformative for your trading. This is my Think or Swim screenshot on my phone. So it shows you all of my winning positions. It also shows you all of my losing positions. And this is my Think or Swim screenshot on my desktop. As you can see, May 9th, 3:53 p.m., $11,163. And I've had a lot of people that have commented under my videos, hey, why don't you show your profits and your results on your actual brokerage account, on your Schwab? So I listened and here they are. Yesterday, May 9th, I made $10,831. The reason for the small discrepancy, it's around a $300 difference, is because Schwab takes off exchange fees at the end of the trading day. So this is my profits after fees. So this is for yesterday, May 9th. May 8th, 2025, I made $4,098. May 7th, Wednesday, I made $5,044. May 6th, that was on Tuesday of this week, I made $4,800. And May 5th, Monday, I made $2,879. So if you do the math, it adds up to around $27,500 in profit for me this past week. And the reason I'm showing you this isn't to boast, it's not to brag, but it's to show you that I actually do this for a living. Everything that I'm going to be teaching you in this video, I personally do to make money in the markets. And there are way too many trading educators that try to teach you how to trade, but they don't actually trade themselves. I want to be as transparent and as real as possible. So now that you know that this actually makes me money almost every single day, let's go ahead and hop right into the video. To preface this video, what I'm about to show you isn't revolutionary. It's not brand new. It's literally existed forever, but it is unbelievably powerful if you know how to apply it correctly. And the best part is it is extremely simple to use. And in this video, I'm going to show you how I practically use this tool. I'm going to show you trades that I took this week and how I was able to use this tool to my advantage and make $27,000 this past week. And this mystery tool is the 20-period simple moving average. And I guarantee there are people that are watching this video that are thinking to themselves, simple moving average, what? Like, I thought he would be using MACD or RSI or Bollinger Bands or VWAP or stochastics or Elliott Wave Theory, all these complicated indicators. And no, I do not. The only tools that I use are the 20 SMA, the 200 SMA, 200 period simple moving average, and volume. But mainly it's the 20 period simple moving average. I like to keep my trading simple. Trading is already hard enough given the fact that it's so psychologically and emotionally demanding. Like, you have to be really disciplined to be a good trader. That's already hard enough. Why would I want to overcomplicate my trading using crazy complex indicators, super cluttered charts, looking at 4 or 5 different things to analyze a stock? No, I don't want to do that. I like to keep it as simple as possible. And that's why I use the 20 MA, right? It's because of the simplicity. But it is so powerful if you know how to use it, which I'm going to show you in this video. And what is the simple moving average, the 20 MA? It essentially tracks roughly the last 1 month of trading data, and it represents that price action in a line. That is all it is. It is a line that helps us trade. There are other moving averages like the 10 MA, the 50 MA, the 100 MA, the 200 MA. And I really like the 20 because it's not too reactive like the 10 MA. Like, if you get violent swings in price, the 10 MA is going to react super crazy. But it's also not too slow like the 50 MA or the 100 MA. It's like that perfect sweet spot where it represents the last 1 month of trading data. Now, I also use the 200 period simple moving average, mostly for support and resistance. And that is kind of like my long-term moving average. So I like to use the 20 SMA for my medium term and 200 MA for my long-term moving average. And the reason I use the 20 MA is because it is the ultimate trend following tool in existence. And a lot of people ask me, why does it work? Like a lot of my students, when they learn how to use it, they apply it in their trading, they would ask me, why does this actually work? Like, what's the reasoning behind it? And I've wondered this as well. And I honestly think it's because it's like a self-fulfilling magnet. There are so many traders, institutions, algorithms that use it, that price just respects it in an unbelievable way that you're about to see. And, you know, at the end of the day, I'm not sure exactly why it works, but it works. And that's the only thing that I really need to worry about. So let's hop into how to actually use it. Number one, the main point here is the 20 MA is not effective when prices are sideways. It is only effective when prices are in a strong uptrend or downtrend, or there's strong momentum in one direction. We don't ever want to see a flat 20 MA. A flat 20 MA isn't really useful. It's not effective for our trading. What we want to see is a rising 20 MA if it's an uptrend, and we want to see a declining 20 MA if it's a downtrend. All right. So like I said, this is the ultimate trend following tool in existence. And trends, whether that's an uptrend or a downtrend, respect the 20 MA in this fashion, where you have the 20 SMA, it's under price, trending higher. All right. And if you've ever been to one of my free classes, you've heard kind of like the jingle, the song that I use, under price, trending higher, under price, trending higher, under price, trending higher. I literally want you to sing it to yourself so you can like cement it in your head. We want the moving average to be under price, trending higher during an uptrend. And the opposite applies during a downtrend. We want it to be over price, trending lower, over price, trending lower if it's in a downtrend. In this way, right? Rising 20 MA, and we have an uptrend. And what you're going to see is that within that trend, prices respect the 20 MA. They trade off of it, where you could have a pullback into that rising 20 MA, right? You could also have a consolidation into that 20 MA. And the same thing applies if it's a downtrend. All right, so we get a move lower, and then we retrace into the declining 20 MA, move lower, retrace into the declining 20 MA. That's what you really need to understand. Let's go ahead and look at some examples. So step number one, we have an established downtrend, and that's extremely important. We have lower highs, lower lows. Now, number two, what is the moving average doing? The 20 SMA is overpriced and declining. You could see how it is declining lower and overpriced. That's exactly what we want to see. So we have this initial consolidation directly into the declining 20 MA right here, and then we get the breakdown. Exactly what we want to see. Look at this. We consolidate directly into the 20 MA. Literally, as soon as it touched the moving average, that's when we broke down. And if you've watched my free 10+ hour course, which I highly recommend that you do, it'll completely build the foundation behind your trading. It's 100% free. It is genuinely better than most paid courses on the internet. It's in the description of this video, so you can begin watching it literally as soon as you finish this video right here. I actually also teach about the 20 MA in the free course, but you could use all of that education and combine it with this YouTube video as well. But if you've watched it, you know that I only really trade two types of strategies, and they are correction strategies. And I'll get to what that means in just a second. But the only strategies I trade are really, you get a move higher, you get a dip, then it sets up as a buy setup, and then I'll trade the continuation higher in that uptrend. Or it moves up, it consolidates, and then I will trade the breakout. This is essentially the foundation of my strategies. I keep it very simple. These are really the only strategies I trade, as you'll see later in this video when I break down my real trades. But that's what we got here. Consolidation, breakdown. Consolidation, breakdown. And I used the 20 period moving average as my way of knowing when to position myself into the trade. All right, let's look at another example here. And honestly, just I don't even need to explain it. It's so simple to look at. Just look at how many times price respects the 20 MA within this uptrend. Like as soon as it started curling here, this was kind of like the start of the uptrend. Right here, it kind of almost touched it. Right here, right here, right here. It literally touched, the tail touched it. The tail touched it right here and then immediately started moving higher, right? Let me move this here. Okay. Same thing, so here, again, hit the 20 MA, started rallying, hit the 20 MA. The tail touched the 20 MA. It kind of broke through the 20 period moving average here, immediately got rejected to the downside and then continued higher. Especially right here, you could see like it's obvious, it's simple, and that's the reason why I use it. Even like any beginner could look at this and be like, yeah, wow, price really respects the 20 period moving average during an uptrend. And every single time it touched the 20 MA, if you went long, you would have made money, right? Just so it's a little bit clearer. Every time it touched the 20 MA, if you went long, you would have made money every single time during this uptrend. And that's exactly why I used the 20 period moving average. I'm not saying you should have went long. I'm not saying every single one of these pullbacks, every single buy setup here is a quality setup. But if you just bought it every time it hit the 20 MA, you would have made money. This is actually a chart of Bitcoin at $30,000. I think this was like the 4-hour chart or maybe the daily chart. I don't even need to explain it, what's going on. It's simple enough for any beginner to look at this and immediately understand what's going on, right? Let me get the pen tool. We moved up, then we kind of retraced and then consolidated into the rising 20 MA, right? What's the 20 period moving average doing? It's under price, trending higher, under price, trending higher, under price, trending higher. You guys get the idea. As soon as it hit the 20 MA, breakout. Did the same thing, based directly into the 20 period moving average, literally touched it, boom, massive breakout. So in this case, how would I enter the trade? So for a breakout like this, I would either enter above the base right here, or if you want extra confirmation, you could enter above the base here. And then where's your stop loss? Below the base. And I mean, it would have made you a ton of money. Very high reward to risk trade. And this is why I use the 20 MA. It's simple, but it is a game changer during uptrends or downtrends, during trending markets. And I would argue that we as traders should only be trading during trending markets. It's super cliche, but the trend is your friend. Why would you trade in a sideways market when there's no clear direction? I want to trade in the direction of the trend. The markets are telling me, hey, I'm going in this direction, whether it's higher or whether that's lower. I identify that and I think to myself, okay, cool. The markets are telling me prices are higher. We're in a trend. I want to go in the direction of that trend because the probability that I'm going to make money increases because I'm trading with the direction. It's like if you're driving on the highway, would you want to drive with the flow of traffic or against the flow of traffic? Well, if you drive against the flow of traffic, you're probably going to crash into a car. It's dangerous. The same thing applies for trading. Why would I try to catch the top and go for reversals when I could trade with the trend? Now, I still do trade reversals. However, they are inherently more difficult than trading with the trend. I see way too many beginners that only trade reversals. It's like you guys are making it harder for yourself. Trade with the trend, and once you get a little bit better as a trader, once you have a little bit more finesse, you know what you're doing, you have more experience, you have more reps, that's when you can begin getting aggressive with reversals. All right, hopefully all of that makes sense. Now, like I just showed you, I trade either breakouts or retracements, and that's how I use the 20 period moving average. And what you want to do is time your entries when prices are either at or near the 20 MA. They don't need to be like literally touching the 20 MA for you to position yourself in the trade, but they have to be at or near the 20 MA. So that's a rising 20 MA if it's an uptrend, like we have right here, rising 20 MA. We want to be buying at or near the 20 period moving average, right? And the opposite applies during a downtrend. You have a downtrend, we want to be buying, or in this case, shorting at or near the 20 MA, right? In this case, it perfectly touched the 20 MA, but you're not always going to get that. And then there's, and that begs the question, why? Why do prices need to be near or at the 20 MA? Because there's this concept called extension. The way you can think of this is the greater the distance between price and the 20 MA, that is known as extension. You can think of extension as overbought if it's like, in an uptrend going, if it's moving up, or oversold if it's in a downtrend. We don't want to be buying or positioning ourselves when prices are extended. We want to be positioning ourselves when prices have corrected, when they're near the 20 MA. So you could use the 20 MA for that. You could use it for measuring how overbought or how oversold a stock or a crypto or Forex pair or whatever you're trading is, all right? And we ideally always want to be getting into it when it's near or at the 20 MA. So you could actually use this idea of extension, of prices being super far away from the 20 MA for reversal opportunities, like this right here. Like, take a look at this. Let me get the pen out and let me make it white so you could see it. Take a look at this. Look at how well prices have respected the 20 MA during the uptrend. Check this out. Literally, perfectly. Every single time it touched the 20, it went up. If you went long every time it hit the 20, you would have made money. Except right here, notice how it started to kind of go parabolic right here. And all of a sudden, we had extension between price and the 20 MA. This is when a trend is exhausted. When a trend is exhausted, that means the trend is beginning to end. Funny enough, that rhymes. But hopefully that makes sense. And the way you can measure whether a trend is exhausted is the distance between price and the 20 MA, right? So in this example right here, you could see that there's kind of distance between price and the 20 MA. And if you want to see what happened right after, well, I have that screenshot. This is what happened. That's when the trend ended and we actually moved lower, and then we ended up rolling over and kind of going sideways and almost actually starting a downtrend right after this, right? So as soon as the trend was exhausted, this is actually a really good opportunity to potentially catch a reversal and go short. So you could use the 20 MA for reversals as well, right? By identifying when the trend is exhausted and then positioning yourself going against the trend, because trend is exhausted, there's not enough buyers. If there's not enough buyers, we're probably going to see lower prices, and that's when we can position short. So in this case, I would probably enter underneath the lows of this bar as a short, stop loss over the highs. All right, I don't want to get too into reversals in this video, but hopefully that makes sense. Here's a really good example of that real fast before we hop into the more practical stuff. I don't want this video to be too long, but we made a massive move, right? The trend was kind of exhausted, massive distance between price and the 20 MA. And this is precisely where you can look to go and play the reversal and capitalize on prices moving up and catching this long. So hopefully that makes sense. So we usually want to do the 20 MA within an uptrend or a downtrend. However, you can use it during reversals if the trend is exhausted, if there's major distance between price and the 20 MA. Hopefully this makes sense. And let's go ahead and hop right into the real life examples. One thing that I definitely want to emphasize before we continue is that when you are trading within an uptrend, whether it's a breakout or whether it's a retracement, you're essentially trading the idea of price correction. The idea that if the market moves up significantly, right, we need to see a price correction before we can make another leg up. Like in this case, we moved up significantly, we retraced, and then we consolidated into that rising 20 MA. As we were consolidating, we were correcting. Prices were performing a correction before it was ready to run the next marathon and have the next move higher. And that's exactly what happened next, right? We moved up. The market ran a marathon, the market put the next leg up. It can't just continue higher forever. It needs to correct, it needs to rest. And that resting, that correction can either happen through a retracement or a consolidation. In this case, it happened through a consolidation into that rising 20 MA, and then we could trade the next leg up. So hopefully that makes sense. When we're trading within an uptrend, we're essentially trading this idea of price correction, this idea that once prices have finished correcting within that trend, we buy and we take advantage of the next move up if it's in an uptrend, or the next move lower if it's in a downtrend. Okay, so I have my Think or Swim platform up. I have the daily chart right here. I have the 2-minute chart. I have the 5-minute chart, and then I have the 15-minute chart. And a lot of you guys are probably wondering, okay, cool, I get all of that. Seems simple enough, but number one, how do you use it in practice? And number two, on which time frames do you use it on? And you need to understand that I use multiple time frames. This is called multiple time frame analysis, and we're looking for multiple time frame alignment. I'm not just using one time frame. Throughout the trading day, I am always looking at the daily chart, and then in the morning, I'm focusing on the 1 and the 2-minute chart, and then as the day progresses, I focus on the 5-minute chart and the 15-minute chart, all while looking at the daily and the hourly. I am constantly looking and analyzing my trades off multiple time frames because it gives me multiple perspectives of what's going on in that stock, and that gives me a better idea on whether that trade is going to make me money or not. It just deepens my analysis. I have a better perspective of what's going on, all right? So a lot of the trades that I'm about to talk about, I'm going to go through this relatively quick. I personally made money on this week, or I watched it this week, or it was on our favorites list in the morning this week. So these aren't like cherry-picked examples from months ago. These were literally trades from either yesterday or Thursday, and this is how I used the 20 MA. So let's look first at the DCGO. Why did I focus on the DCGO yesterday? Well, number one, it was a really interesting gap down. On Thursday, it closed at around 230 right here. I'll zoom in. And then yesterday, it opened at 190. The reason I thought it was interesting on the daily chart is because it gapped down underneath support, underneath the all-time lows, directly under support, and it gapped underneath this move higher. I'll probably make another video going more into gaps and how I trade gaps on the daily chart, but this is why I was focusing on it. And right off the bat, if you just look at the 2-minute chart in the morning, I mean, look at this. We dropped, and I'm gonna kind of zoom in here. Look at this just beautiful setup. We dropped, we kind of retraced, moved in, moved a little bit back down, and look at this consolidation. Beautiful base breakdown directly into the declining 20-period moving average. I went short right here, and I put my stop loss right above the base and caught this move lower. Beautiful, beautiful setup. Now, once again, look at, for example, the 5-minute chart, right? Even later into the day. And this was closer to like 12:30 to the end of the day. Look at how well prices are respecting the 20-period moving average, right? You can see it's just trading off of it. Look at the 15-minute chart right here. We moved down, we retraced, dropped it a bit, and we just based right into the declining 20 MA, and then we got the breakdown. And this trade right here, I think this ended up making me like $600. I couldn't get that much size because I couldn't get filled, but short under the base, stop loss above it. Like literally on this trade, 2 different really interesting setups that worked that completely just consolidated into that declining 20 MA. Beautiful on the DCGO. Let's look at another example. NVAX, this thing made me like $2,500 at the end of the day yesterday, right? This wasn't an interesting gap. It just started to move down, but what I really want to show you is this. Check this out. So this thing was consistently downtrending all day. You could see like on the 5, you could see how well prices are respecting the 20 MA. It's not completely declining, but it is more or less but you could see how well prices are respecting it. Now right here, it started to break down 20 MA overpriced. This is the 5-minute. Even on the 15, if you look at the higher time frames, when we got closer to here, right, it got closer to the 20 MA and it was getting ready to break down. Then I went to the smaller time frame. This is how I use multiple time frames. Look at this 2-minute base right here. I mean, beautiful, unreal. Like, look at this. It dropped, based right into that declining 20 MA on the 2, and we got this breakdown. I got like 14,000 shares right here, and I caught this move lower. Ended up making me like $2,500. Really, really beautiful trade. But you could see how I'm combining multiple time frames. Downtrend on the 5, respecting the 20 MA. Right here, it's way too extended from the 20 MA and the 15 and needed to consolidate and correct before it did this breakdown, right? Really, really nice. And then on the 2 minute, we got that 20 MA breakdown. Beautiful, beautiful, beautiful stuff. Next, we got the PLX, another really, really interesting setup here. All right, so let's kind of analyze it. What do we got? Nice gap down. Look at this. It closed at 289 the previous day. Next day opened at 240. Look at this massive move lower. And the gap was the catalyst for that move. And look at the 15-minute chart. We dropped, retraced, based directly into the 20 MA. You didn't quite touch it, but it was at or near. Remember I said near the 20 MA. Then we got the breakdown. And then honestly, just time ran out and it didn't make that next move lower. You look at the 5, look at this. We dropped, retraced into the 5-minute 20 MA. Then we got another drop. But then the day ended. All right. Even on the 2-minute chart, you could see like it's how well right here it's respecting the 20 MA. This is why I use it. It's like multiple time frames are telling me the same exact thing. That's why I get so confident using it. Oh, the IOVA. The main thing that I want to show you is actually the 1-minute chart. This was right off the morning. Check this out right here. Check this out. We dropped. This was actually one of my top watches. And I tried to scalp this 3 times yesterday. First 3 of them lost money. I was down $700, and then right here it retraced right into that declining 20 MA, and right here it literally touched it. I went short at 94. I remember 94. I went short, and I caught this whole move lower, made all of my money back plus another $1,200 on the IOVA. I think that was my NPNL on it. Let me check. Let's see, what was my NPNL on the IOVA? Yeah, $1,200 literally. All right, let's move on. So that was really, really nice. Let's look at, oh, this is another, this isn't even that high quality of a trade, but number one, look at the 5. Began the uptrend, rising 20 MA, retraced right into it, moved higher. Even look at the 15. We moved up, retraced right into the 20 MA, bounced right into the 20 MA, bounced, and we continued higher. Beautiful, beautiful setup. And hopefully this just gives you an idea of how you're using it. Look at this open. Open was my biggest trade yesterday. Take a look at the 2-minute chart and the 5-minute chart. By the way, this is a beautiful gap down as well under support. Look at this. Dropped, based right into the 20 MA drop, based right into the 20 MA on the downtrend. Amazing move. This made me over 4,000. And they open right here on the 2-minute. Same thing. We combined multiple time frames. Same thing. We based right into the declining 20 MA. It's the same things. You guys are seeing how freaking useful it is. Even the Kodak yesterday, which was really good. Look at this. We moved down, retraced, moved down, based at the lows, right into the declining 20 MA and the 15. And then we got the follow through and the breakdown lower. Had a really interesting daily gap as well. It gapped under 2 green bars, so it trapped all of the buyers from the last 2 days. Same thing with the 5. You can see how it's declining. The GMAD was one of my best trades in the morning, as a matter of fact. And if we look at this, I went short right here. And then you could see how well it respected that downtrend. But I went short, let me clean it up. Right here, when it consolidated into that 20 MA, went short and made money. Very good. Let's move on. CRVS, same thing here. Not even that great of a setup. But look, respecting the 20 MA on this 5-minute move higher, especially here. Really nice little retracement. And then here as well on the 15. Beautiful, respected the 20 MA. Not a high quality setup, but you guys get the idea. Lift. Look at this lift. Power trend. This was a big gap up on the daily chart. I think it had earnings. Gapped up, right? So nice bullish catalyst in the morning. Moved up based on the breakout. And look at this. I mean, every time it hit the 20 MA, it moved up. If you just rode out this power trend, it would have made you money literally all day. Let's see, what else? The go-go, same thing with this. Didn't quite hit the 20 MA, but this was a nice breakout. And then it respected the 20 MA as it was moving higher. We really want that 20 MA to be trending and not flat, right? Let's look at the CRVX, same thing here. All of these, if you just look at every time frame, it really respects the 20 MA. Even this actually got bought and then went climactic, was a nice short. I didn't take it. And then even on the way down, look at this, during the downtrend, perfectly respected the 20 MA. I mean, every single setup I'm basically showing you guys. It's the same exact thing. And this is what I do every single day in my trading. Now, I obviously don't just use the 20 MA. I have exceptional mastery of knowing the quality of the setups, what criteria go into a high quality setup. You can learn all this in my free 10+ hour course. Watch it in the description of this video. I also combine using level 2. I made a YouTube video about that. Obviously, with my knowledge on how to trade gaps on the daily chart, which are bullish or bearish catalyst for that stock. Gaps can occur because of all sorts of reasons. I also have a YouTube video about that. Watch it. So it's not just the 20 MA, but I'm combining the usefulness of the 20 MA with everything else that I know about trading, and it just creates way more higher probability setups. It is truly unreal, and this is why I use it. It's the only indicator I use. Same thing here on the zip. Based right into the declining MA, attempted to break down, not much follow through, but you guys get the idea. Insane stuff. Even this, CTMX, look at this. 20 MA starting to trend lower. This one's a little sloppy, but same idea, right? Hopefully you guys get the point. These were literally trades from the last few days that I was able to make money on using the 20 MA with my knowledge of setups, with my knowledge of order flow, and just knowing everything that I'm good at with trading. Combine it all and it creates really high probability setups. This is what allows me to make money, guys. It's what allows me to get results like this because I keep it simple, and you should too. Hopefully you found this video incredibly useful. Please leave a like, subscribe to the channel. I'm constantly posting really educational and valuable videos that you could actually use to make money with. Subscribe, like, leave a comment if you found this valuable. And if anyone who's watching is looking for a serious hands-on mentor that you could trade live with every single day, I will be transparent. I do have a mentorship where I help scale and coach traders from zero to making $10,000 to $50,000 per month. I had plenty of students that surpassed $5,000 to $20,000 this past week trading alongside of me, right? Like I made $11,000 or I guess $10,800 yesterday. I had plenty of students that hit anywhere between $500 to $7,000 with me just yesterday. If you're looking for a hands-on serious mentor that will work with you until you find success, there's a application below. I'm very selective with who I work with because I only like to work with dedicated, disciplined, and professional traders or traders who want to be professional. So fill out the application if you're interested, but make sure you also get started with my free 10+ hour course. And hopefully you found this very educational. I'll see you guys on the next video.